This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Fighting words. The government says Apple's rhetoric is false and it should open an encrypted iPhone used by a California gunman. Rally fizzles. The European Central Bank cut rates and stocks take off, but then the air came out of the balloon. So what happened? And muscling up, why General Motors thinks a legendary brand is ready to roar again. All that and more for Thursday, March 10th. Good evening, everyone, and welcome. Tyler Matheson is on assignment tonight. The Justice Department filed its latest response in the fight over encryption, calling Apple's rhetoric false and corrosive. The government wants Apple to comply with a court order to help the FBI unlock an iPhone used by one of the gunmen in a December attack in San Bernardino, California, which left 14 people dead. The government also said in this case, Apple, quote, deliberately raised technological barriers, end quote, and that Apple can remove those barriers. So let's bring Eamon Javers in, who's been following this story from the beginning, for more. The Justice Department wording was extremely strong, Eamon.
Yeah, really tough language here from the DOJ, Sue, and I want to read you an excerpt to give you a sense of just how strong this language was. The DOJ writing here that Apple attacked the All Writs Act, that's that 1789 law that the government is relying on here. Apple attacked the All Writs Act as archaic, the court's order as leading to a police state, and the FBI's investigation as shoddy, while extolling itself as the primary guardian of Americans' privacy. So here is the Department of Justice saying that Apple is holding itself up on a pedestal as the guardian of America's privacy, when in reality the Department of Justice says this is about terrorism and access to a particular phone under a legal warrant. So this is this back and forth blizzard of paperwork that we're going to see now between Apple and the government ahead of this end of March hearing, where we'll see both of those parties in court and they can argue it out in front of the judge.
You know, though public opinion is so divided on this, Eamon, the latest NBC News Wall Street Journal poll basically said 47% say that Apple should not cooperate and open the phone. 42% say it should. It's
right.
Fascinating.
Yeah, it is. Very tight. And of course, you notice there, both sides below 50%. So there's no real consensus in the country at all on what ought to be done here. This is a case that everyone who is watching it thinks might be headed to the Supreme Court, because it's one of those fundamental tests of America's liberties versus law enforcement's ability to go after criminals that's going to have to be decided by a high court, because a lot of this technology, these questions of encryption, are so new to the courts and to the legal system.
Now, one of Apple's claims is that they would have to devote an enormous amount of manpower and a lot of hours to, if they decided to cooperate with the government. The government counters it would take probably six engineers and 2 weeks. So there's some ground somewhere in there.
That's right. Look, the government doesn't buy Apple's argument that this would be unduly burdensome on Apple to create the software that the government wants Apple to create here. They also say that Apple doesn't have any First Amendment rights or Fifth Amendment rights that pertain to this specific request from the government. So the government very skeptical of Apple here, as you would expect them to be in these court filings. It's very argumentative, and it's an intense argument.
All right, so the next date is when? When are we going
to? End of March. I believe the hearing will be March 22nd. So that's when we'll see both sides have a chance to argue in front of the judge who issued the original order in favor of the government's position here. Presumably, whichever side she comes down on, the party that's not happy with that is going to appeal it. So I think this will go to the Ninth Circuit after that, and then possibly all the way up to the Supreme Court.
Eamon, thank you so much. We appreciate it.
You bet, Sue.
Well, for most of the day, the story was the European Central Bank's decision to cut interest rates and expand its economic stimulus program. Julia Chatterley has the details from Frankfurt, Germany.
Investors were hoping for a bazooka, and Mario Draghi, president of the European Central Bank, more than obliged. He announced a 25% increase in the monthly asset purchases. This in an effort to keep bond yields down, keep mortgage costs and consumer loan costs down. He also announced 4 big new lending facilities, 4-year money that can be borrowed at 0 rates. And get this, he said if the banks can get their net lending above a certain threshold, they'll be paid to do it. So all the focus really in this meeting about pushing cash out to the real economy and making sure the banks aren't being damaged too much by negative deposit rates. He did take those, though, further into negative territory, but at the same time, you see this effort to offset some of the impact that's having on bank profitability. We saw bank stocks certainly rally in the European session today. What else he announced, though, and this is the big one, they are going to be buying corporate bonds in Europe as well. They won't buy bank bonds, but we're still seeing a huge increase in the available assets that they're now willing to buy. I have to say, he also mentioned the fact that rates in Europe will remain significantly low beyond the end of this program, which is March 2017. So while there was an effort to get cash out to the real economy, protect the profitability of banks, you have to feel sorry for savers, both in Germany and more broadly in the Eurozone. For Nightly Business Report, I'm Julia Chatterley in Frankfurt.
So those moves by the ECB were originally welcomed by investors. Stocks jumped at the open, but quickly reversed course, at one point down about 1% during the day. But then in the end, stocks recovered and kind of hugged the flat line. The Dow losing 5 points to 16,995. The Nasdaq dropped 12, but the S&P 500 was able to scratch out a fractional gain. All of that had some people asking, what happened? Bob Pisani explains.
What happened to our rally? ECB head Mario Draghi initially did everything the market expected. He reduced rates, he expanded the QE program, he announced they would be buying corporate bonds, so stocks went up. The euro went down, bond yields went down, at least in Europe. But then at the end of the press conference, he made a remark that sort of changed everything. He said he didn't anticipate the need to further reduce rates. Okay, though, that doesn't sound like much, but suddenly everything reversed. Stocks in Europe and the U.S., our futures started dropping. Germany ended down 2% for the day. Now, why did that happen? That doesn't sound very controversial. Maybe Draghi just wanted to send a more balanced message that rates won't keep going down forever. Well, that sounds reasonable, but for whatever reason, the market seems surprised by that. And at the very least, it indicates that the market's addiction to stimulus programs is still very strong. Now, it didn't help that oil dropped at the open, so many big oil names like ExxonMobil struggled all day to get into the green. Now, one positive aspect of the ECB moves was that the dollar weakened against the euro. A weaker dollar is good news for multinational companies because it makes exports cheaper for others to buy. So companies like Coke and Philip Morris and Pepsi and Clorox did go into the green, although only fractionally. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Bill Adams joins us now to talk more about the European Central Bank's move today and what it might mean for the U.S. economy and the Federal Reserve. He's senior international economist with PNC Financial. Bill, welcome back. Nice to have you here.
Good to be back, Sue.
I guess the question is, what does it mean to those of us here in the United States that have investment dollars committed? Because now our Fed is going in the opposite direction of the European Central Bank and many other central banks around the world.
Well, it was a tricky easing measure from the ECB. There were a couple of different tools that they used to ease, and they used them in different degrees today. I think the takeaway is that monetary policy is getting easier overseas. You would expect that to cause a stronger dollar over the course of this year, but markets had expected more than we got today. I think this reaction with a weaker dollar, stronger euro might not last. But I don't. In either case, I think it's probably not going to be enough to stop the Fed from continuing to gradually raise rates in the United States in 2016.
What about our economy here at home? Europe obviously is struggling, and in many cases has not recovered at all from the financial crisis. Yet our economy, we're getting some mixed data, but in general, things look like we're on an upswing.
Well, the U.S. economy now, we see the sharp divergence between the domestic side of the U.S. economy and the service sector and the labor market, which looks like they're fairly good and they're getting better. And then the export side of the U.S. economy and energy and manufacturing that are really struggling against the strength of the U.S. dollar.
What about those two sectors? Because some people look at the whipsaw that we're seeing in oil and the downdraft that we're seeing in other areas as recessionary or deflationary. Do either of those two terms fit with your scenario for the economy?
I don't think those apply to the U.S. economy. In the U.S., we're looking for real GDP growth of 2% in 2016, or maybe a little bit better. The unemployment rate will probably continue to edge lower over the course of the year, maybe reach 4.7% by the end of the year. That's pretty good by U.S. standards. For low oil prices, obviously that's negative for oil producers, but it's like a tax cut for American consumers, and it should boost consumer spending power, and that'll mean more spending on other goods and services in the U.S. economy. On net, low oil prices should be good for U.S. growth.
Are you happy with wage growth? Because we're starting to see a little bit of, not wage inflation necessarily, but growth in wages.
It's encouraging that we are seeing wage growth start to trend higher. It's not where we expect it to be. I think we'll probably see faster wage growth by the end of this year, and that's because the labor market in the United States is tightening, and this is the part of the business cycle where we traditionally do see wages accelerate.
All right, on that note, Bill, thank you so much for your perspective. We appreciate it. Bill Adams with PNC
Thanks
Financial.
for having me.
Meantime, American Express is talking directly to investors and addressing their concerns that the company's business model is broken. Kayla Tausche has more from San Francisco.
American Express has evolved from freight mail to traveler's checks to being the largest U.S. credit card issuer by purchases. But investors are now doubting that its business model can withstand customer defections, regulatory challenges, and a rapidly changing competitive landscape. CEO Ken Chenault, helming the company for 15 years, addressed those concerns head-on Thursday at the start of American Express's Investor Day.
Let me start with the first question I mentioned. Is the American Express business model fundamentally broken? I can tell you with complete confidence that the answer here is no. Some elements of our business haven't performed as well as we'd like in this environment. Yes, we're ending our Costco partnership, but our model isn't broken, nor is it static.
But the Costco agreement will hurt. Amex hit just half its U.S. consumer billings target, mainly due to Costco. Amex is also being dropped by Fidelity and JetBlue. Due to this environment, Chenault said the prior earnings target of 12 to 15% earnings per share growth would no longer be appropriate, though he declined to set a new target. Now, despite Warren Buffett holding a more than 15% stake in the company, it was the Dow's worst performer this year before news of an executive reorganization and a big cost-cutting plan pulled it off the lows. Chenault also addressed that plan.
We've demonstrated we can hit the expense goals we set for ourselves, and I'm confident we can achieve our most recent billion-dollar target. The priority for me and for all of our business leaders is sustainably growing revenue. Our board is fully supportive of our plans.
That support he mentioned, though, dampened investor speculation the company could pursue a merger, acquisition, or even CEO change. Instead, Amex is refocusing on one of its existing revenue streams, lending. Now a, quote, major strategic thrust, though the company's website boasts its one competitive advantage is not having to rely on it. As the strategy was unveiled, Amex shares fell. Analysts at Stifel said a focus on organic growth wouldn't necessarily be surprising, but also wouldn't be likely to change what it called, quote, increasingly negative investor sentiment. For Nightly Business Report, I'm Kayla Tausche.
Coming up, small business gets some help fighting regulation and some very onerous licensing laws. When it comes to small business owners, regulation is always near the top of their concerns, even more so than the economy. And in our latest look at small business matters, small business owners have an advocate challenging some of these laws. Kate Rogers has more from Charleston, South Carolina.
So I have flashcards here that I made up, hundreds of them.
Kimberly Billups studied for 3 months to pass the City of Charleston's tour guide exam in the hopes of opening her own historic tour business. But Billups, who once gave historic home tours in Savannah, Georgia, says a city law requiring a 200-question test based on a 500-page book and an oral exam stands in her way.
The fathers, the authors and the signers of the Declaration of Independence and the Constitution are buried right here in our backyard. And the hypocrisy of all of this, you know, I know they're rolling over in their grave.
Around the country, government regulations and red tape have long plagued Main Street, but now would-be entrepreneurs like Billups are fighting back with the help of DC-based nonprofit law firm the Institute for Justice. IJ filed suit on Billups' behalf in January.
There's nothing more fundamental to the idea of the American dream than the idea that you can start your own business, be your own boss. The last thing we need is for the government to stand in between a would-be entrepreneur and a willing, fully informed customer.
The City of Charleston says its tourism industry reaches nearly 5 million visitors, and it has a responsibility to regulate it in a manner that, quote, provides for continued success and prosperity while protecting the public. In Wisconsin, the controversy is over cookies. Lisa Kiveris takes pride in the muffins and cookies that she serves to guests at her bed and breakfast in Browntown, Wisconsin. But selling those same home-baked goods to customers could potentially land Kiveris in jail for up to 6 months. The reason? The state doesn't allow for the sale of baked goods not made in a licensed commercial kitchen, which Kiveris says could cost nearly $50,000. So she can serve her guests the treats, but if they want to buy some extra for the road, it's against the law.
Over the last 20 years, I've lost thousands of dollars of income of these muffins that I could be selling, along with other baked goods, to guests as they head home after staying here.
IJ filed suit in January against the Wisconsin Department of Agriculture, Trade, and Consumer Protection on behalf of Kiveris and 2 other entrepreneurs. The Wisconsin DOJ says it's reviewing the complaint.
So if we could help home bakers like myself with that on-ramp, we could really revitalize our economy on a lasting local level. And that's the important ingredient to all of this.
For Nightly Business Report in Charleston, South Carolina, I'm Kate Rogers.
Dollar General raises its dividend, and that is where we begin tonight's market focus. The discount retailer is increasing its quarterly dividend to 25 cents from 22 cents. The company also will buy back about $1 billion in shares. Dollar General also saw sales rise 7% as demand rose for candy and perishables and tobacco. Shares surged more than 10% to 83.23. Party City issued better than expected earnings for the latest quarter. Sales growth increased more than 2% for the party supply retailer, thanks to a robust Halloween shopping season. The company did, however, miss on revenue targets, and it expects sales to come in below expectations for the year. Nonetheless, shares surged 14% to $12.50. TransCanada is reportedly in talks to buy natural gas company Columbia. TransCanada issued that statement later in the day, confirming it was in talks with an unnamed company and that no agreement had been reached. Columbia Pipeline shares rose more than 8.5% to $21.43. Shares of TransCanada fell nearly 4% to $35.66. Software maker Nuance Communications will buy back $500 million of its shares from billionaire Carl Icahn and some of his affiliates. That deal is expected to close next week. Shares fell nearly 2% to $19.81. Straight ahead, how General Motors hopes low gas prices will help brighten up one of its legendary brands. Lockheed Martin is best known as an aerospace contractor whose products are used by the military. But now the company has something for the commercial market, and it's unique, so much so that you might say it's a bird, it's a plane, it's, well, Jane Wells explains.
One morning 10 years ago, a bizarre aircraft flew out of Lockheed Martin's secretive Skunk Works in the California high desert. It was a helium-filled hybrid airship, which was part blimp, part wing, with 4 external diesel engines to control movement. Lockheed wondered if it could find customers willing to carry cargo this way to remote areas of the world.
And you'd back your truck right up here and you load and unload your cargo from the backside.
10 years later, the company thinks it has found customers willing to buy the airship, called the LMH-1, as a less expensive way to deliver equipment or products to areas without infrastructure, everyone from mining operations to UPS.
And how much will it cost?
Well, we're $40 million list price, which is pretty affordable for an aircraft.
I'm inside one of the 3 so-called lobes in the prototype. It's like being in a really big bounce house. But when the real airship is built, these things are going to be 3 times bigger and longer. And in total, it'll be able to carry 47,000 pounds of cargo.
This is actually something that's going to dramatically change the way we move cargo around the world.
Grant Kuhl is in charge of selling the LMH-1 to the commercial market. He brings in potential customers to this mock-up of the 19-passenger gondola, which Lockheed had built by a Hollywood set designer. There's also a simulator to play with.
Did we land?
Did.
Oh my gosh, thank you.
All of this in a place not used to letting in the media. I mean, this is where they built the SR-71.
How unusual is it for Lockheed to have sort of a kind of a separate sales segment, if you will?
From what I understand, it's totally unique.
The airship goes on sale at a time when the defense side is slowing down, and Lockheed just announced 1,000 voluntary buyouts. While there are competitors creating other airships, Lockheed hopes to be first to market by the end of 2018. It also hopes to sell hundreds of them, and the first orders are expected in the next few weeks.
Our goal has always been to do the lowest possible cost. We're focused on the cargo market. We believe that's the initial market for that.
Boyd said Lockheed Martin has put in over $100 million to fund this product, and whether a place known for stealthy military projects can succeed in the open commercial world remains up in the air. For Nightly Business Report, Jane Wells, Palmdale, California.
And from the air to the road, and this one is for all of you muscle car fans. Chevy is rolling out 2 new versions of the Camaro and making a push to gallop right past the Mustang in sales. Phil LeBeau has more on the Camaro comeback.
Top down, engine roaring. Chevy believes this will be the summer Camaro comes back. Leading the charge, 2 new versions, including a convertible.
The first month in here, our sales are up 44%, so we know a lot of people were waiting for the new car, and when we introduced the new car, everybody's like, wow, this is great.
The Camaro still has the sound and look that helped it define the muscle car. And yes, you can get 6- and 8-cylinder versions. But in a change that may seem strange to Camaro fans, there's a new addition with a 4-cylinder engine.
With gas at well under $2 a gallon, Chevy believes muscle cars will be even more attractive. Not only because people will spend less at the pump, but they'll also have more money to pay for a muscle car like the new Camaro.
In order for these vehicles to survive from a business case standpoint, they gotta get repeat sales, which means the woman or guy that has one today has to feel good enough about that ownership that in 2, 3, or 4 years, they're gonna buy again. And cheap fuel makes that a lot easier decision.
The muscle car war between Chevy and Ford has seen the latest version of the Mustang race ahead of the Camaro in the last year, when sales dipped. Still, GM says Camaros in a showroom will bring in buyers. But increasingly, those buying a Camaro or a Ford Mustang are looking for more than pure power and a throaty roar.
The cars we're driving today are all about handling and precise steering and brakes, and that's a different formula than what the muscle car is known for. So I think we're going to open this up to a whole bunch of new buyers.
A new age for an iconic car, still pushing the thrill of opening it up and cruising down the highway. Phil LeBeau, Nightly Business Report, Las Vegas.
A few months ago, we told you about the spending controversy at the Wounded Warrior Project. Now, CBS is reporting the CEO and COO of that organization have been fired. The charity came under fire when a CBS investigation revealed lavish spending. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for watching. We want to remind you this is the time of year your public television station seeks your support, and we thank you for that. Have a great evening. We'll see you tomorrow.